Trading can be the most rewarding journey, but also the most frustrating. Trust me, I've been on both sides. When I started trading, I felt completely overwhelmed. So many markets, so many assets. Where do you even begin? Here's what I learned. Having a basic understanding of financial markets is essential if you're serious about trading success. That's why in today's video I'm cutting through the noise and giving you a clear, beginner-friendly introduction to financial markets. Part 2 of this beginner series is covering the introduction to financial markets. So let's jump into the charts and ask ourselves the first and foremost important question when it comes to financial markets. What are actually financial markets? So the definition is that financial markets are platforms where buyers and sellers engage in trading financial assets. So here we have stocks like Tesla, bonds, commodities like gold, Forex like the Euro USD pair, or cryptocurrency like Bitcoin. Our trader's perspective is these financial markets provide opportunities to engage in buying and selling assets to make a profit. Let's now first cover the basics of trading stocks. So stocks represent ownership in a company traded on stock exchanges. In further lessons, I'm gonna explain what different financial assets we can trade so we don't have to own a stock but still are able to trade a stock. But that will come in the next lesson. So when it comes to stock trading, we have opening hours. So if we look at this on TradingView, we can see that currently we're trading in pre-market. This time is given in New York time zone, as the big exchange is always the New York Stock Exchange. So we can see in New York time, the pre-market is trading from 4 a.m. till 9:30 a.m. At 9:30 we will get the market open. So if you're in UK time, this will be at 9 a.m. UK time. This is where the pre-market trading starts, and we get the NY open, so New York open at 2:30 p.m. So the market will be open from 9:30 a.m. New York time till 4 p.m. New York time. Okay, and then we have a post-market, which is from 4 p.m. New York time till 8 p.m. UK time. And then we have the market closed. And then this process just repeats. So these times are not going to change, and it will be the same every single day unless we have a holiday in the US. So we can day trade stocks. That means capitalizing on opportunities that are presented in an intraday basis. We can also participate in swing trading. That means we increase the time frame we are looking at for taking trades and also holding trades. So if we're looking at swing trades, we want to get into a trade and hold that for a couple of days, maybe even weeks or months. The most local time frame or way of trading is scalp trading. So on the stock market, we can also capitalize on scalp trading. That means we are on the very low time frames and only aim to hold a trade for a couple of minutes, sometimes even seconds. As we already covered, as traders, our main or primary focus is always the technical analysis. So when it comes to stock trading, our primary focus is on volume analysis. We can just use some simple indicators on TradingView for the volume profile. This is something I will cover in further videos, but we can use volume analysis, simple technical analysis, tools like supply and demand zones, or we can simply look at price movements using market structure. So bonds are tradable debt securities issued by entities. Here we can see the 10-year T-note futures. Okay, so the market is, we have two market types. That is one, the primary versus the secondary markets. So the primary market is where bonds are issued and sold directly to investors, while the secondary market is where existing bonds are traded among investors. This is what we can see here. So at the same time, we can look at trading strategies, and that differs a little bit to trading stocks, cryptocurrencies, forex, and all these types of stuff. So here, people are interested in interest rate speculation. That means profiting from changes in bond prices due to interest rate movements. That already suggests that as bond traders, we have to keep a primary focus on economic data releases. So another trading strategy is the yield curve analysis, and that means understanding the relationship between interest rate and different bond maturities to make informed trading decisions. The key indicators we would use are interest rates, economic data, as I already said, and credit rating. So for me, I'm already going to say that myself, I'm not too interested in trading bonds, but this is something one can do if interested in trading bonds. So the next thing is trading commodities. And one very popular example for this is trading gold futures. So when it comes to trading commodities, we have to look at the definition, and that is commodities are raw materials or primary products on exchanges. In this example, I'm looking at gold futures. By the way, this is just the asset I choose to trade when it comes to commodities like gold. In the next lesson, I'm going to cover the different assets to trade, so you will understand all the different assets we can trade and capitalize on as traders. When it comes to commodities, we can trade the spot market and futures. Okay, when it comes to spot, it means that we actually have ownership in the underlying commodity. So that means you can buy gold and keep it in a safe, for example. That would be owning the actual underlying asset, but you can also buy spot and keep that on an exchange. Okay, if you just buy a ETF of the gold, for example. Okay, or we can trade gold futures. That is my favorite asset to trade when it comes to gold trading. For trading strategies, we can think about futures trading. That has the lowest fees. We can look at options trading and also spread trading. A futures contract means that we have an agreement to buy or sell a commodity at a predetermined price at a specific time in the future. Options contracts give you the right but not the obligation to buy or sell a commodity. And spread trading refers to simultaneously buying and selling related commodities to profit from price differences, for example, on different exchanges. The key indicators for trading commodities are supply and demand factors, geopolitical events, and also weather patterns. Another market we can trade is the forex market, and that is the largest financial market where we can buy and sell currencies like the euro against US dollar. And this market is particularly characterized by its high volatility, and also if we trade CFDs, this is a very well-known asset to trade when it comes to the financial market of currencies. I will cover this financial asset next time, but this is traded 24/7. So we get 24/7 trading access with currencies. And we have different trading sessions. So this is London session, New York session, and Tokyo session. So this will be the Asia session. This is very important to note when it comes to volume characteristics. So we always have to keep in mind that New York trades the highest amount of volume. So whenever we trade, we should primarily focus on the New York trading session. However, we can still capitalize on price movements in London session or even Tokyo session. We just have to be aware of lower volatility. When it comes to key indicators, we are looking at technical analysis, volume analysis, economic indicators, but also central bank policies. For that, it's once again important to be aware of economic data releases and also political stability. So let's now summarize what we have learned in this lesson and look at key takeaways. So financial markets offer several instruments and assets to trade. For every personality type, there is a matching asset to trade. And that is what's so good about trading. No matter your time zone or your preference for whatever asset, you will find the right asset to trade. And that meets your criteria and your own personality. Trading each of these assets offers potential for significant profits, but requires a deep understanding of market dynamics and strategies. What I learned in my trading career is that this last part is so important. We have to understand market dynamics and also strategies, and that comes with time. So what I want to do with this series is break down what I have learned in my 5 years of experience and share with you the most important things that I've learned. So in the next lesson, I will be covering the different assets to trade. So see you in there, and I hope you enjoyed this video.